Please welcome the panel on Harnessing the Rising Tide of Digital Finance, moderated by Director of FinTech at the Milken Institute, Nicole Valentine.
Good morning, everyone. Pleasure to be here with you as we discuss Harnessing the Rising Tide of Digital Finance. I'm Nicole Valentine, run the FinTech group here at the Milken Institute, where we cover everything from crypto to payments to AI and finance to remittances, money moving around the world, the future of finance. Well, if I were to take a step back and write a book about FinTech, I would say chapter 1 would be Money Never Sleeps. From the ATM to moving financial services 24/7, I would say Money Never Sleeps is the first chapter. The second chapter, I would say, is embedded. It's where the FinTech maximalists are in action, and FinTech is embedded in every type of business, where you're at Starbucks, you think you're at a coffee shop, you're at a FinTech. You're buying a BMW, you're at a FinTech. Whatever you're doing, payments embedded is happening on the back end, and also you have a front-end experience. And then if I would say my chapter 3 would be impact. Impact matters, because all of this financial technology, all of this innovation that's happening, if it doesn't reach the masses, then why? So impact is important, and FinTech should deliver on the economic mobility for everyone. So that would be my book. But I have 4 amazing speakers that I don't know if you all have books, but you all should, because in your own right, you are doing some amazing, innovative work that is changing the world. I'd love to get your chapter and verse on what kind of story you have in your FinTech journey. I'd love to start with you, Melvin. QCP, I mean, you are here in the Middle East. You are based out of Singapore. You are an international story. I'd love for you to tell us your FinTech chapter in verse.
Yeah, good morning, everyone. My name is Melvin. QCP is a digital asset partner and one of the leading ones out of Asia. And we're glad to be physically present here in the Middle East. And I'll look at the story of the company. In the first chapter, I would say that there'll be doubters. And doubters because when we first looked at digital assets as an economy itself, it was really conceived as a scam, money laundering. And many people were not looking at this from a technological standpoint, what it could do to change finance, as well as the fact that the global economy was going through a real cycle of money printing. I think many people have not caught on to that fact at that point in time. Chapter 2 would really be curiosity, and I think this is where we are in this sector of the market. I think with the recent launch of the ETFs, we are in the business of derivatives and hedging. I think we're seeing a lot more curiosity with regards to that. Commissioner Pham's with us today, and she's also going to demonstrate that this curiosity is leading to a lot of clarity in terms of how we want to take this forward, move the industry into that space where everyone is going to go and land in the final chapter, which I call believers. And where we're saying is, and this is where we take the vision of our firm is that there will be Bitcoin on every balance sheet globally. And that is why we're here. We exist to serve the clients that have assets on balance sheet that needs help in terms of trying to navigate this very, very volatile space.
Thank you for that. So doubters, curiosity, believers. We're going to get into your believer story further on in the conversation, but thank you for that. Gal, Pagaya, tell us your story. I mean, you are innovating with AI, so you have, I'm sure, a lot to tell us.
So Nicole, I will need to steal one chapter from your book, because I think the definitely first chapter in Pagaya is impact. And it is how we helped over 2 million Americans to get over $25 billion in literally the last 3 to 4 years. So if you need to phrase what Pagaya does, or what we were born to do, is to help any American who is looking to get credit, let it be for buying a car, or for his vacation, or anything else, and to build that in an embedded way, exactly as you shared it, to be relevant for every place in the US that someone is looking to get consumer credit. And we're talking about huge numbers of over 2 million people that got credit through Pagaya, and over $25 billion of money that has been lent and returned through this. Pagaya, more likely than not, is one of the fastest growing lending fintech in the world, definitely in the US. And I think the impact and the purpose is our first chapter. The second chapter, I would say the revolution in banks. Banks quietly are opening their hands and are embracing fintech more than ever has been done. Like us and like many others, they recognize that the revolution and the technology is actually another way to serve the customers. So while it takes them time, and it's not that straightforward for them, there are very big collaborative parts in that ecosystem. And in Pagaya, that chapter number 2 was simply put, going public. Because to be well-known enterprise solution for major banks in the US, and we do work with large banks such as US Bank, which is the 5th biggest, LA Bank, SoFi, Klarna, that we speak a lot about the IPO lately. And all of that has been done because we took the initiative of only after 6 years since the company was born to go public and to say we are here to stay, and we are here to drive that revolution in lending through and with the banks rather than disrupting them. The third chapter, and I think that's the chapter we are living today and what we are experiencing in the Milken more than anything, is how it's the word of scale. It's how private credit and the huge balance sheets of the world that is being represented by the most sophisticated asset managers in the world, but basically it's the pension money and the insurance money, is getting into the system to change the balance sheets of the banks and to be able to continue to flourish and to push the expansion of newly fintech lending capabilities into the mass. So we are now experiencing the third piece, which is how you get to scale in that. I think the future is very bright and big. And I think that if we'll sit here 5 years from now, the private credit consumer side is going to be as big, if not bigger, than the private credit corporate side. So these are my 3 chapters.
That's great. Embedded, revolution in banks, and scale. I'll read that. So, GB, I mean, the title of your book, I mean, unicorn, right? That we should start there. I mean, Flutterwave is a unicorn, and you have done some amazing things on the continent of Africa and beyond. I'd love for you to tell us what your chapters would be.
So mine will start with what I'll call the ripple effect. That will be the first chapter of my book. And I'm choosing that because it takes me back to the beginning of when the idea of Flutterwave started. And I was really trying to solve problems for how money moves in the continent. If we were to do a money transfer from Nigeria to Ghana, that money gets there in 2-3 days. If we were to get on a flight from Nigeria to Ghana, it's a 1-hour flight. Right, so it makes no sense. So from day one of Flutterwave, the goal has been how do we redefine payment for a connecting continent, right? How do we redefine how money moves? From there, I will go from builder to banker and back to builder, right? My career spans from being a software engineer at PayPal 20 years ago to joining a bank in Africa and going back to building again. And I think that's a major piece of how Flutterwave today has been able to shape our technology infrastructure in building an interoperable payment system for Africa, where we connect every payment type together to build a superhighway for payments. Next chapter of my book, if and when I'm writing one, will be what I will call Africa Redefined, right? And that is because now in Africa, if you were to we're redefining Africa to be the global hub of payments for the world, which is crazy to say, but yet it's happening. Now, companies like Uber, Netflix, Microsoft are scaling in Africa because payment is now simple, right? You're able to get an Uber ride with your debit card or mobile money in a simple, easy way because Flutterwave exists. And that's what we're redefining Africa for. Money movement in Africa is now real time. There is P2P money movement that works pretty seamlessly because of the infrastructure that we're building and we've built, and we're scaling that as well. Now we're creating the foundation for merchant payments, right? Making it easy for global merchants to do payments in Africa seamlessly. Making it easy for African companies to also expand beyond Africa, because Africa does not exist in isolation. We're connecting the world to Africa through seamless payments, and that is how we are defining, how Africa can reimagine and redefine itself. A couple of weeks ago, 2 African airlines started flying from Lagos to London, Lagos to the US. That was very interesting because that would have been impossible if payments was hard. But they could come to a Flutterwave, we could define a payment system for them that makes it easy for somebody in New York City, someone in London to just get there and pay with their cards. And it works seamlessly as paying for anything else you pay for in the West. And that might seem very simple, but it required a lot of interconnected infrastructure working together to make that happen. And that's what we call the future of redefining Africa. Then the next piece would then be what I will call learning from you, Africa 2.0, right? How do we put all these things together to drive value and create access to credit, access to infrastructure, making it simple and easy for companies to scale their businesses across the continent, making it easy for any company who wants to expand into Africa. Africa is the new growth continent, literally. We're a billion people, the average age, 18 to 30. It's the frontier for anyone who wants to build a global business in the future, who wants to scale. And I think we are here to make that scale simple when it comes to payments.
Wonderful. So ripple effect, builder to banker to builder, Africa redefined, scale. Love it. So we have our commissioner from the United States, of the U.S. Commodity Futures Trading Commission, Commissioner Caroline Pham. Pleasure to have you with us again. Would love to hear your story. I mean, you're brilliant. I've been able to spend a lot of time with you over the years, and there's just so many layers to your FinTech story. Tell us a little bit about what your chapters would be.
Thank you, Nicole, and thank you so much for having me here. Like all good books, there has to be a prologue or a foreword, and that is my standard disclaimer. So the views I share today are just those of my own in my official capacity as a commissioner, and do not necessarily represent that of the CFTC or of any other commissioner. So if I had to talk about my FinTech journey and what my book would be, it would be a book about cities. So chapter 1 is Washington. That's where I went to law school, that's where I began my career, and the vibe, skepticism, if not just outright negativity. Technology, FinTech seems to imply something where it's lax, it's the Wild West, there's sort of no controls, we don't know if people are just trying to get around the existing rules or regulations, and so the vibe, skeptic or negative. Then we go to chapter 2. Chapter 2 is New York. It's Singapore, it's all the international financial capitals of the world, because then the next place I went in my career was to join Citigroup. And I was based in New York, but traveled and had global responsibilities, and so the vibe there is confident. We know this. We got this. We are the world. We're in 200 countries around the world. And what was really special about my time at Citi was because I worked across the institutional and the retail businesses, and I worked on innovation, I was able to see technology in our financial system. Of course, when you look at markets are electronically traded. A trading system is highly automated, so of course that's embedded. But then being able to work with the consumer bank, being able to work with Citi Ventures, being able to work with Citi FinTech, and seeing how, particularly in, let's take Singapore as an example, in APAC, the consumer base, the market there, they're early adopters. They're open to technology. And it felt to me when I went to Asia that I was looking into the future, that 10 years from now, the kind of consumer financial services that are available with mobile banking, with QR codes, with all of that, robots, is something that, 10 years from now, maybe we would see that in the United States. I mean, I still remember when I was studying abroad in high school and I was in Paris, and they would bring a point of sale right there to the table when you were, and this is in the 90s, and you would pay that way. And in the United States, when I had my job at Macy's, I was still using a swipe machine to make the I don't even know, the paper copy or the impression of the credit card. So just imagine the difference between Europe and the United States, between Singapore and Asia and the West. So what is the next chapter? The next chapter, the next city, the new financial capitals of the world. I've been coming to the GCC every year since I've been a commissioner, since 2022, and the energy that is here, that's the vibe. The vibe is energy, is opportunity, is new market, new technologies, resources and talent to put it all together. And when I think about how it's not just the new financial capitals of the world, but it's about how innovation facilitators here through ADGM or through Dubai and the DIFC, it's really designed to think about how the digital economy is really permeating every aspect of our lives. If we think about, my daughter, your children, how online are they? They're in virtual worlds. I was one of the first regulators to talk about the metaverse in 2022, gave a speech to European central bankers and finance ministers, and I truly think with Web 3.0, with blockchain technology, with the fact that you can have this global transaction layer, that is going to be, it can be used for financial transactions, but it can also just be to exchange any asset, anything that can be represented on that blockchain. So I think it's going to be not just the new financial capitals of the world here in the GCC, in the global south, but it's also going to be these virtual cities, these virtual worlds that we're going to be in.
I love it. I love you taking us on a global tour because in the MENA region, as you know, is integral in this fourth industrial revolution. I mean, it is fastest growing in FinTech and AI. Melvin, you are based here. You have a company here. Tell us what it's like to do business here. What is the experience for your company, for investment, for innovation? Tell us about the experience of QCP.
Yeah, so we're headquartered in Singapore, so we spent quite a lot of time there, and we were looking for a next expansion point. That journey took a 1.5-year journey across all the financial centers globally. We went through Hong Kong, London, New York, and we were thinking, because of our thesis that this is going to be a financial asset at that point. But we found something very interesting in this region, and that was the idea of innovation, the ability to dream. And I think we were absolutely captivated by that spirit, not only from the people, but from the regulators, people who are trying to allow and facilitate the future of finance. And so we went down this rabbit hole, I would say, of this exploring the region and exploring the UAE especially. And we found very, very interesting conversations. People who are regulators, we would say, would sit down and discuss with us the future of what trading digital assets would look like, and go through their regulations and demonstrate to us that they have considered these things. Now, when we think about business and we think about the importance of regulation, it is really to give us the consistency to execute. And I think that is something we found here. We like it here. Operating here has been a wonderful journey because of the fact that the people who are working alongside you, the lawmakers, they believe and they're dreaming alongside us.
That's great. GB, Africa has one of the fastest growing FinTech startup ecosystems due to a very tech-savvy, talented, young demographic that is moving money at just a pace. Can you tell us what's next for FinTech on the continent? What are you seeing? I'm seeing stable coins. There's lots of movement, lots of activity, lots of energy. From your lens, how is the FinTech industry evolving in Africa?
So Africa FinTech is going through an evolution, which is very interesting. And evolution is being driven by the realities of our market and our environment, and also the global influence as well. One of them is obviously blockchain. We're seeing a lot of stablecoin infra being built across the continent right now. For a country where it is extremely expensive to move money across countries, across borders in Africa, stablecoin creates a very great alternative for that to happen. So naturally, people are building infrastructure on stablecoin, mixing some with TradFi to make sure that work can scale really well. The other piece you will see here as well is consistent deepening of going deeper into each market. So for example, if you go to Kenya right now, M-Pesa is a great payment system that is going deeper and deeper into the ecosystem of Kenya. And if you go into Ghana, you see MTN Mobile Money doing the same as well, Airtel Money doing the same in Rwanda. But what we are trying to solve for across board now is really how do you constantly make them interoperable, right? How do you leverage blockchain for large value money movement? How do you make money movement seamless, very cost efficient, but yet still extremely efficient in the way it works? All of that is happening right now across the board. You will see, for example, so many companies solving vertical-led problems. You have the likes of Bamboo solving for invest tech in Africa. Now an average African can invest in US stock exchange from their app in Lagos or in Joburg because Bamboo exists. You see companies like Piggyvest making it simple to save across the continent. You see companies like, all these companies are building vertical-led fintech solutions that will solve problems for this specific area they're focusing. So it's a really exciting time right now for Africa where these companies are stepping up to solve real use cases that consumers and businesses require in the market. Another piece is cross-border payments, right, that we're also solving for. We're seeing that being very huge in how companies are moving money across the continent. Now, a Microsoft can get paid in Nigeria and the money gets to their accounts in the US the next day because those systems exist. So I think it's still early days in Africa FinTech. We're not anywhere near that growth path yet. There's so much room for growth across countries, across regions, and I think this is a time to literally go long and invest in Africa, if you ask me.
Wonderful. Speaking of growth, Gal, let's talk about private credit. So, the electricity of the infrastructure of AI and finance, you're in it. You're utilizing AI, you're combining with your private credit and lending solutions. Give us the private credit story. How are we going to see some more evolution and scale in that space? And what's as an architect of it, how are you moving forward in your pursuits?
So I think the best way to describe it is the following. There are two sides to the equations. There is always how you get the access to the origination engine. What I mean by that is where different consumers, corporate, etc., are asking for money. And then there is the other side of it, which is the balance sheet. So if you take a bank, and you think about a bank in the last hundreds of years, it had two purposes. One, to be a safe, to take deposits from the people, and at the same time to use that collective money and to let it out to drive exactly what you said, growth. Let's leave the reasons aside. Mainly regulators in the world, in the US, etc., around the 2000, especially in 2008, said, you know what? Not really. Let's make the banks only safes. How much they could lend? We're going to limit them. Why? Because every time that these folks got the license to lend, simply put, it didn't end up so good. So the regulators wanted to distinguish between a potential risk that will be on the safe of the place of where people holding their money. That shift of one or many regulatory decision opened huge amounts of newly formed capital and industries trying to bridge that gap. In the world of private credit, as we know them from the corporate side, the logic was, let's take many of the bankers' infrastructure that knows to underwrite investment-grade loans, And let's just change them. We'll keep the same systems, the same thinking, but we'll change the balance sheet they are lending from. So instead of a bank balance sheet, that, as we said, is almost not allowed anymore, they're going to use pension money, they're going to use insurance capital, and therefore we created huge, amazing companies like Apollo, like Blue Owl, like many others who said, there is a huge opportunity here. We can lend as good as the banks, if not more, just using a different capital. That was the form, the birth of the private credit. In the consumer side, which is few X bigger, there is $4 trillion of consumer assets in the US. That shift has just started. Now, it's a little bit more complex problem. Why? Because in order to give money to the people, you need a much heavier infrastructure. Branches, US bank website. Now, you can't strip that out and just connect it to Blue Owl or Apollo. And the underwriting that is involved is not by corporate lenders, but by AI, by sophisticated, developed machine learning models that could help you assess the risk of these borrowers. So what we are experiencing right now in the private credit side is the growth of a subsegment, which is the asset-based lending, which is providing the liquidity for all the newly formed business model that is allowing people to get consumer credit as they should. But the place where the balance sheet is sitting is still in the private credit side, i.e. the insurance capital, i.e. the pension fund. Now, that phenomena is amazingly good, because in that space, and the regulator did well in that, you could have very safe banks to put the money, but in the same time, to bring different type of partners to be able to fund that growth or to provide that liquidity to the people. Pagaya, which has connected through an API to many banks in the US to make sure that the distribution of these money is happening, and on the other side have very strong relationship with the biggest private credit, as the names that I just mentioned, to feed them, is the interconnect into this revolution that is coming, that makes bank pull back, the private credit lean in, and they need a technology embedded infrastructure to do it and to do it well. And that's the story of the next wave of growth that's going to come from these type of folks.
Thank you. I mean, it's great to have such innovators on the platform here talking about the evolution of industry. There's an evolution of regulation, of regulators that are also at play, an evolution of people in government who actually understand the technology that they are regulating. Commissioner Pham, you're one of those folks. I would love for you to talk about some of the initiatives that you have embarked upon at the CFTC. I sit on one of your subcommittees where you've brought over 100 experts in the industry to come together and work on work streams. I'd love for you to share the value of that to your work and to your approach.
Well, thank you so much, Nicole. And what I loved about what you were just talking about, your journey and with private credit, is that really the way forward has to be partnerships because of the constraints that are put on traditional financial institutions, but also because when you think about every dollar of revenue that a big bank has to spend to keep the lights on, to do with the regulatory, with the risk management, with the compliance and all of those things, how much of that dollar can really go towards new technology spend? That's why I think partnerships is going to be so important with some of these innovative technology solutions, but that's why regulators also need to get smarter about how to regulate partnerships, because again, it's been very handed. It's been very negative with third-party risk management, very negative with looking at the use of new and emerging technologies. I wanted to push back against this sort of truism in Washington, for example. Again, the vibe, negative. And because of my experience at a large bank, working across all businesses, across multiple jurisdictions, and seeing that there are regulators, for example, in Singapore, incredibly sophisticated, who understand the technology, who have been at the forefront of different pilot programs. That's why I launched my Global Markets Advisory Committee, which is the largest single advisory committee initiative the CFTC has ever sponsored. It's got over 125 members, as you mentioned, across 3 subcommittees. And so it's really about having a level playing field for global businesses and global markets. And it is an advisory committee that is not ashamed to talk about what is the impact of changing technology, of the changing regulatory environment on the business strategy and the commercial operations. What's always struck me about Washington is that recently, the climate, to be a regulator, you're supposed to know nothing about the industry of which you are regulating, have no experience in that industry. That, to me, makes no sense whatsoever. If I'm going to write a global policy when I was at Citi, I needed to sit down and really understand what was the business, what was the client, what were the segments, what are the systems, what are the processes. So it's unimaginable to me that we're going to sit here and create a whole regulatory framework, and it's all based upon theory, for example. So that's what the GMAC was pushing away against. I'm like, this is a way to get pragmatic solutions to the biggest global challenges, global solutions, and to have industry leaders and experts there. So I'll talk about the Digital Asset Markets Subcommittee, and thank you so much for your service. Everybody contributes, volunteers their time and their resources of their firms. It's really tremendous that we have people who are still so willing, even a challenging regulatory environment, to participate, to contribute. And what we've done so far is we've done the first ever US digital asset taxonomy. And the idea behind this was because so many other countries in the world have already made these advancements in creating regulatory constructs for crypto assets. Singapore, of course, being one of the first ones, Japan as well, MiCA in Europe, but also we now have the FSB that has international standards for crypto assets. So we need to catch up in the United States. And this is really a tool to make sure that we're all speaking the same language when we're talking about digital assets. And it would help to bridge that gap between the current level of understanding in the United States and where the rest of the world was. It's a guide to help be a resource to US policymakers as we think about alignment, because these are inherently global markets. This technology is borderless. And that's the beauty of it, because it creates access at low cost, connectivity, peer-to-peer, between the furthest points on the globe. And that's miraculous. That is really a value add to public society. Some of the other work streams that I'm very excited about, they just did a recommendation on the tokenization of non-cash collateral. As people think about the efficiencies of using blockchain technology to modernize financial market infrastructure, markets, for example, 24/7 trading, right? You need a settlement asset, preferably a bearer instrument, that can move 24/7. And as we all know, the cash leg of transactions, banks, payment, sending money around the world doesn't move in real time. So this recommendation would allow for US Treasury money market funds, tokenized, to be pledged as non-cash collateral for the derivatives markets. And I think this is really going to open up institutional adoption, because if we think about blockchain technology in our traditional financial markets, I think the killer app is actually collateral management. It's kind of boring, it's really important. Then the other 2 work streams that are exciting, so we had a presentation from our utility token work stream. In a nutshell, again, around the world, there's a definition of utility tokens. People understand this is a token that provides access to goods and services. Think about rewards points for hotels, for your airlines, customer loyalty programs, fan club programs for your favorite sports team, for your favorite artist. Those are commercial activities. Those aren't stocks. Those should not be subject to regulation. A commercial marketplace like eBay or Amazon that is peer-to-peer, nobody thinks that that should be regulated like the New York Stock Exchange. So why don't we say a utility token is not a security and move on, right? Make sure that that's clearly in the bucket of commercial activity. And last but not least, there is a work stream on NFTs. Again, NFTs is very interesting. If you think about an NFT, which would be, for example, again, maybe it's a work of art. Maybe it's an NFT that is a virtual asset in a video game. Maybe it's, who knows what. But it's a thing. It is not a financial instrument. And when you think about, I think about the private bank, and I think about how people have illiquid assets. Maybe they're priceless works of art. Maybe it's a private jet. They want to use it as collateral. They want to somehow monetize it. Why don't we think about how we use NFTs and be able to pledge that, be able to finance it, be able to unlock the value in it when people have these assets. And so the NFT workstream, I think, is also going to be very important. Again, not a security, and I'm looking forward to what could be over the horizon in 2025.
Well, I enjoy working with you on your committees. They're stellar, and we're going to keep this going. I want to maybe end the conversation with quick thoughts from you on what are you obsessed with? So, FinTech program at the Milken Institute, I'm obsessed with impact. We're releasing a report. We're going to be talking about measuring and defining impact. We want to make sure the FinTech industry delivers on the promises of democratization and on the promises of access and economic mobility. Impact obsessed. GB, what are you obsessed with in a few seconds?
So I would say my obsession right now is about transformation and redefining perception about Africa, right? Helping people to see the transformative power of how African payment is actually very advanced than what people think, and how Africa is redefining how technology can drive growth very quickly.
Wonderful. Melvin, what are you obsessed with?
I'm obsessed with people. People who are interested in how digital assets can actually make life better. Looking at what GB and Gal are talking about, with digital assets inside the ecosystem, it will improve and speed up the work that's going to be done. And what we do a lot with stablecoins as a company, that's what we've seen as a very impactful way. And people who are interested in mining Bitcoin for yourself, but in a synthetic way. You don't have to own a mine to do this. You can only actually do it using financial engineering. So I'm obsessed in helping the people move from their curiosity into the stage of believers.
Wonderful. Gal, what are you obsessed with?
I think a better world. I think the revolution of tech, especially in FinTech, is one that could get better outcome for banks, better outcome for investors, and the most important, better outcome for people. Back in the days, we were thinking about it's my meal or your meal. The bank earns or the consumer earns. Regulators are thinking about how to protect the people, which is right. With technology and with the revolution that we are all going through, there is a place where you get this, and that. And what we are trying to show to the world that the win-win-win of all parties, including the regulators, is really at a reach very quickly if everyone is open to think and to change the fundamental way we did it in the past.
Thank you. Commissioner Pham, what are you obsessed with?
I'm obsessed with excellence. I blame my parents. But why should we not be obsessed with excellence no matter what? There is a saying in the United States, there's a saying in Washington, which is good enough for government work. Why would we settle for that? Why should something be good enough for government work? Why should I not be performing and being at the same level of service to my clients, to the American taxpayer, as I did when I was at a bank? It should be the same standard of excellence. And so that's what I'm obsessed with. That's what I've been trying to bring as my small piece of transformation to my agency and to Washington.
Well, you're delivering, and this panel delivered. Thank you so much for this conversation. Enjoy the rest of your day.
Thank you very much, Nicole.